Is it time to be worried during this summer? Well, we do have a few alarm bells going on in the intermarket related warning bells. The bonds, US dollar, Euro Swiss, and let's start with the bonds. Fortunately, we have had the bottom, not at 185 but at 195, but we are still below the descending trend line. So maybe there is short-term a rebound like we had in April. We remember that in April, that rebound already preceded a small correction in the US equity market. Second, we have the US dollar index, which is rebounding from the bottom of its range 2 weeks ago to now almost the top of its range. If it breaks above 97.25, then it will go possibly to the top of the wide range at 98. And we know that that's not too positive for the US, for the S&P 500 when the US dollar index is rising from the bottom to the top of its range. Fortunately, here the yellow line represents the yen strength, and that yen is going sideways, so there is no strong warning, but a little one. Another warning bells is the Euro-Swiss relationship. Even though it is moving very little in narrow range, recently it is basically taking the attitude of a risk-off situation. The Swiss franc is getting stronger, as if it was calling for some trouble all the way around the world in equities. So you remember we said 2 weeks ago that we were bullish for the summer because the advanced decline line, the breadth of the market was good and was rising. That's the case. It's making new highs. But short term, we should be aware that it could looks like what has happened in August 2018. And we should remember that the end of the correction in 2018 was at the end of June. The end of correction here was at the end of May. So it's kind of 1 month earlier this year. So instead of making a top possibly in September, maybe we'll do a top in August, mid-August, or very late July. That's a question. And of course, in the very short term, we need, or you need, to look at the price pattern. If it looks very similar to April in the coming days and weeks, then you might have some insight about when there is the final top. It may be not just a coincidence that it looks like very much alike. Indeed, small and mid cap are lagging the large cap. That's not a too good sign, and we have mentioned that many times. So for the S&P 500, if we look at the short term, we are at 3,017 at an all-time high, but possibly in a pattern which resembles the one of April. And we would not like really to have such a decline like we had in May without having warned you of its possibilities. It's not yet confirmed, but we know that it is, in fact, a possibility. We had the two paths last year, and we said that what is important is the Nasdaq 100. If the Nasdaq, the technology sector, is holding up, if it starts to roll over, that will be a confirmation that our red path is going to be preferred to our green path. Globally, nothing has changed. Even it is getting a little bit worse in the last 2 weeks. Emerging markets have not been able to make a breakup. Japan and Asia, especially Korea, slowing down. But Japan is not also making a new high above its descending trend line. So here it is rather neutral. And the relative strength is making even lower low. And Europe is still lagging somehow with lower lows in the relative strength and still below, holding below resistance. Even though people are mentioning that it is above the cloud and are short-term trying to be bullish. But the pattern is not extremely bullish. It is rather the one of a rebound within a downtrend. So here we go for the rest of the summer. We have really to be careful and watching what's going on in all these different relationships that I've mentioned to you today. And I'll see you in September.